Hello, and welcome to another edition of CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, October 23rd. Yesterday, in the late afternoon, the Reserve Bank of New Zealand lowered rates by a full 1% to 6.5%. The bank is taking aggressive action in the face of the ongoing financial market turmoil and the deteriorating outlook for global growth. With domestic demand falling as well, Reserve Bank Governor Ballard felt the need to lower borrowing costs aggressively in order to encourage banks to lend to businesses and consumers. The New Zealand dollar has been declining at a sharp pace against the US dollar. After the full 1% rate cut, the Kiwi gained about 80 pips. However, starting in the European session, the downtrend continued as those earlier gains were wiped out by the New York session. Eurozone industrial new orders fell by 1.2% in August, the third month out of the last four that orders have been negative. July's figure, however, was revised higher to show a 2% increase. Still, the data for August strongly undershot expectations and shows the problem European companies are having as the global economy slows and domestic demand falters in the face of the credit crisis. The euro-dollar pair held its ground today, after heavy selling pressure brought the pair down about 700 pips in the last three sessions to the 1.27 level. That's the lowest this pair has been since December of 2006. Retail sales were negative in the UK, falling 0.4% for the month of September. This result was better than forecast, though it follows a rather strong August in which sales were up 1.2%. The annual pace of sales fell to 1.8%, lower than expectations, and a decrease from the 3.3% seen in August. That annual rate is the slowest since February of 2006. The pound-dollar pair has also seen heavy selling the last three sessions, but here yesterday's low was broken and the pair set a fresh 5-year low near 1.6040. The move in favor of the greenback corresponded to the period following the UK retail sales data. In the US, jobless claims rose more than expected for the week of October 18th. The figure stood at 478,000, an increase of 15,000. Jobless claims are still being affected by the losses from Hurricane Ike. The 4-week moving average fell for the first time in 7 weeks, decreasing to 480,250, a decrease of 4,500. That is still well above recessionary levels and bodes poorly for the non-farm payroll data for the month of October. We have seen 9 straight months of declines in the monthly jobs report so far in 2008. Also in the U.S., a government measure of housing prices was down 0.6% in August on a seasonally adjusted basis. The biggest decline came in the Pacific region, which saw prices drop 1.8%. House prices, are the same as they were in the value in September of 2005. The yen continued its gains against the dollar as European stocks turned modestly lower and U.S. stocks moved back and forth before settling into negative territory in early afternoon trading. That puts the dollar-yen pair about 550 pips lower than its high to start the week. Overnight, Germany and the Eurozone post their preliminary readings for manufacturing and services PMIs. The UK will release its advanced release of third quarter GDP. Tomorrow, Canada posts its consumer price data, and the U.S. ends the week with data on existing home sales. And that wraps up this edition of our broadcast. Thank you for joining us here at CMSFX.com, and happy trading.